Hey, it's Mike. Welcome to the channel. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're going to talk about three things in particular. We're going to be talking about my tsly payout. We're going to be talking about my put option, and then we're going to be talking about my weekly buys. The first thing let's talk about is my tsly payout. So we're going to go to our account. We're going to go to history, and we're going to see how much they paid out. So what they paid out, take a minute. All right. So if you scroll down over here, this is the one. So tsly, 646 shares, paid me 83 cents a share, which approximately is $536.37. This is a pretty decent payout for a covered called fund. I think total value of this is about $9,900. So I am starting to track some metrics over here. So I did this thing where I combined my July and August numbers for the payouts because I didn't get paid anything out in July. And this is just my total amount in my income strategy here. So my goal here is I'm using margin to enhance my gains. My goal is to never sell my core positions. My core positions, I just want to keep going, growing and growing. And then I want to borrow against them eventually to make an extra stream of income. So total fund value, $11,278.28. This is counting the margin and a little bit of money that I put in myself. My margin, so the total percentage of this that is margin is $9,922.79, which comes up to 88% of margin used to produce this extra income. So in the last 2 months, I made about $664.56. Pretty much most of the payout was in the month of August. July paid out like $57, but I just was too lazy to make a separate month. In terms of expenses, the expenses are going to be counting for the Robinhood Gold and the interest percentage. And we could see here in my Robinhood account when I was paid or when I had to pay interest. So this is my Robinhood Gold here. Oh, it must have been July's interest percentage then. There you go. Okay. So July's interest I paid was $49.09, and that is at the 7.75%. The current rate right now is 8%. So if you go into this main portion here, I kind of like this new thing that they did is tells you about margin status, and right now I'm at a low risk. So I have about $101,000 before I do get margin called, which is a pretty solid buffer, and this tells you your margin percentage here. So, you know, if you want to calculate how much margin is accruing, it's $1.75 on that 9,000-ish or so dollars that I have. Now, going on, continuing, so expenses, so that's counting the margin as well as the Robinhood Gold. Since I'm trying to be smart about my taxes, I ran into an issue using margin like a couple of years ago is because I didn't account for any taxes, and I made, I don't know, like $40 or $50 or $60,000 selling covered calls on tsly using margin, but I didn't count for any taxes. And my goal was to sell stock to pay for the taxes, but then the stock market just surged down and I was left with this pretty huge tax bill. So now I'm being smart about it. I am going to be limiting the amount of, I'm setting aside money for taxes. So this is my gross income. I subtracted the expenses from there. And then after the expenses at a 30% tax bracket, which is the tax bracket that I'm in, $181 taxes. So the net gain is $482.92. So the monthly yield, so I got an extra like 4.28% worth of yield in this account. But because I was using margin, since 88% of this number is 3.77, so I got an extra 3.7% boost in income because I've been using margin. So that's an interesting metric that I want to be tracking going forward. So there's that. So we talked about the tsly payout. Let's talk about the put option. So over here, I did a put option on Tesla. I bought it for, it was 0.63. That's what I bought it for here. If you see, my average cost is that. And now I am up over 200% on this put option. The reason this put option is up 200% is because Tesla share price is down. So, you know, going back to this chart, let's just talk a little bit of technical analysis. Not a big technical analysis guy myself, but let's just talk about where we're at here. So where we're at here is, you know, I kind of bought this put right around here at this 266 area. And what I was anticipating is, due to, inflation still being pretty hot, interest rates still rising, there's gonna be a factory shutdown sometime in the third quarter for the Project Highland. I believe Tesla is actually in the short term going to drop down. And I'm not really good at picking short term or long term bets, but I mean, there is a chance that the share price could go down to 160-ish, 170s. And my goal maybe here is to hold this position till the share price hits about 170 perhaps, or maybe I should take my profit. So I'm still trying to decide what I want to do with this. Depending on what the market does on Monday, if it starts surging up, I might just take my profit now. If it starts dropping like an elevator again, then I'm going to hold on to this put option. Finally, the last thing, I have 4 new buys. So let's just go back to my history and let's talk about the 4 things that I purchased here. So I bought 4 stocks here. The first stock is I bought Tesla. I finally fulfilled my goal of having 800 shares of Tesla. So, this Tesla symbol, bought 2 shares, cost about $448. This one's a no-brainer. I'm finally at my 800 share mark here. And just a couple thoughts on Tesla. The reason I'm continually investing in Tesla is that they're a rapidly growing company. They're increasing the revenue in the 50-ish percentage mark, even higher than that. Their free cash flow is rising drastically. The net income is increasing drastically. Their earnings per share is increasing drastically. They have no debt, a huge cash pile, and this is a company that's still growing, and this is something I want to continue going forward. We do have some stock dilution, but in the end, it's still a growing company, and some companies have to do that to keep growing. They have kind of slowed it down to a point. The next company that I bought was, I have a list of the world's best companies that I want to continue purchasing, and there is history. Okay, next company I bought. So we bought Tesla. Waste management. A couple thoughts on waste management here. I bought 1 share, and my end goal is I have this list of 25 of the world's best companies, best stocks in the world. I left a list of 25 of these. Since I got 800 shares of Tesla, I'm going to be purchasing 1 share each of one of these. Once I hit the 1 share mark each for all of them, then I want to start picking and choosing which ones I want to keep putting more money in, or which I will not. So continuing thoughts on waste management. So waste management, this company picks up trash. It is a very simple business model. Revenue growing year over year. Trash is a business that, regardless of what inflation does, if you're in a recession, the trash needs to be picked up. And a lot of people have been sleeping on garbage companies. It's not a complex company, but you can see the metrics rising over here. Revenue rising. You have earnings before interest, taxes, depreciation going up. Free cash flow seems to be trending up. The net income is trending up. Their dividends they're paying out is increasing over time. Their share counts are decreasing over time. The only thing I don't like about waste management is I wish they kind of cooled down with the stock buybacks, and they just made more of a cash position. Their debt is about $14 billion, and their company is worth $64 billion. For a good portion of their growth is because they keep financing debt. Not a big fan of that, but at some point, whatever they would be using for share buybacks, they could very easily just build a pretty huge cash position. Therefore, I'm letting them slide. And again, just because it's a bulletproof business model, picking up trash is a pretty decent business. So I bought 1 share of that. Moving along. The next thing here we're going to be talking about is the next stock that I bought. And the next stock that I bought was Visa. So 1 share of that. And Visa's a pretty straightforward company. It is a company that just keeps growing and growing and growing. It has a massive moat. You can see revenues growing year over year. Earnings before, all that stuff is increasing. Free cash flow is increasing like crazy. The net income is increasing, earning per share. They have a huge cash position. They're pretty much on par with the amount of debt that they have. They've been having an increasing dividend and decreasing share count. I mean, how can this not be one of the world's best companies? Visa, great company. Pretty much like a toll booth company. Anytime you swipe the credit card, they're pretty much securing that payment, and then they're taking a little percentage of that. And for the foreseeable future, even if people are going to be paying in Bitcoin, there's always going to be some sort of transaction fee. And at some point, not at some point, but Visa has been looking into how they would incorporate their business model with crypto payments. And again, this company just prints money, and it is a must for owning. So that's why it's another world's best company. The final stock that we bought here is Apple. A couple thoughts on Apple here. Let's look at their business. Oops, AP. Oh my goodness. All right, let's look at the Apple business line. Revenue increasing year over year. Same thing with EBITDA, free cash flow increasing, net income, earning per share. Cash position is a little bit less, but they still have a stockpile of money. Dividends increasing, share count decreasing. I mean, what is not to love? Yes, the valuation is a little bit high, but this company still makes a ton of money. And ultimately, as an investor, you are getting rewarded on a company's ability to print money, whether they're making phones, whether they're picking up trash, whether they're moving freight across the country, whether they're building tanks, whatever it is. The reason you invest in a company is for that company's ability to make free cash flow. If it makes free cash flow, you make money. If it can't do that, why are you investing in it? Apple's another great company. All right, so those are kind of my picks. Some of the reasoning why I purchased these stocks. You know, I still want to build out a position, all of these ones. Finally hit my 800 shares of Tesla, and yeah, so kind of interested to see how these income funds are going to fare in the future and how much extra boost I can get by using margin, especially now that the stock market is going to be perhaps coming down. We'll see. But you know, if you like the video, you know, definitely give it a like. And if you have any questions, definitely leave a comment or a question in the comment section. All right, y'all have a good one.